interesting to see a bull in your office. That's the Bombay Stock Exchange bull, right?
Yes, that's correct.
Oh, wow. Very, very clearly portrays it all summarizes just one mannequin summarizes the whole and backed by greenery with couple of plants. That's a pleasant sight to see in your office right now.
Thanks, Kirubhahar. It's a memory from our listing ceremony that happened.
Oh, wow. Okay.
Now I would say almost we're closing in on almost 2 years since we went public, right? So this particular memento was given by the Bombay Stock Exchange on the day of listing, which was November 21st, 2021. So very, very, very fond memories.
Very nice. Oh, that's definitely a great day to remember, especially as a CFO. Yeah, I'm one of the persons who were actively looking into the IPO allotment and slot running behind Latentview, picking up 2 slots, asking my wife to put a couple of slots here and there, and yeah, fantastic.
Yeah, no, that was, I would say, from while the end result is what we can talk with a lot of pride about today, but I think. I mean, people say that it's a 100-mile walk begins with the first step, right? So I think in a lot of ways, the way the company was set up by the promoters, I of course joined them at a time where the company had already scaled up to a certain level, right? But I think the way the company was set up, the company was run, right? The culture, the sort of ethos behind the company, all of that is what finally culminated into a stupendous IPO. I think a lot of those intangibles people don't really see, right? But those go a long way in setting up a company in the right way, right? And growing in the right fashion, growing profitably, growing with, I would say, the right set of client logos, the right set of management and people, right? I mean, all of these things take a lot of time to create and nurture, and I think the IPO in some sense was a culmination of efforts over a 16-year period, which finally led to that massive oversubscription that happened.
I'm sure
everyone talks about, but there's a lot of work that happened in the background, right, to get to that point.
Yeah, I'm sure there was a reason Latentview was majorly looked about during the IPO phase. Also, a few words you mentioned right now. Today, we live in a world of valuation for startups and etc. and etc. But growing the right way, the exact set of client logos. When we see today, there is a discussion majorly around growth versus profitability. You used the word growing profitably, right? So that's where the traditional methods of the financing and accounting versus the modern ways of doing it today in the world of valuation game. Those words are rightly said. I'm sure the 16-year period from people like you, and it's a fantastic journey to have. And I'm sure it is because of these factors today where Latentview is where today is because of all those combined together. And kudos to whatever has been done so far on that front, Rajan. So I'll probably get started. So very pleasant good evening to everybody who is joined in on the webinar front. I see a few familiar names, a lot of new names, and a lot of big names. Thank you so much for joining us to begin with. And today the webinar is a very interesting topic, right? So to have a little bit context about in Spendflo of doing this whole webinar series, and we also do a lot of mixer series, is we often see that in the corporate world, the set of CIOs have a lot of meetups, CIO catch-ups. The set of CEOs have a lot of catch-ups. Sales, you never know, they always catch up. Marketing functions, they all have a lot of meetings. But we somewhere saw that the finance leaders and the CFOs folks do not have a common forum, or a lot of things were not happening around it, except for a few events here and there. That is where we wanted to create a series of events and webinars put together, wherein we will have prominent speakers like the one we have today, where it can be a lot of exchange of ideas and learning that can happen from it, right? So that's the idea behind Spendflo starting it, and it has beautifully emerged. A number of episodes have gone. It's there on YouTube as well. And today, it's a very interesting topic. I really liked and enjoyed the topic the moment it was proposed and discussed, right? Chief Financial Officer, from CFO to CVO, from CFO to Chief Value Officer is what we are going to talk about. I personally believe that it's never from a CFO to a CVO. CFO technically equates to CVO because they are the ones who bring the value into the company because they hold the major part of it, right? The financials front. So on that front, a very, very warm welcome to today's edition of webinar from CFO to Chief Value Officer. So in a world where it's marked by very limited resources, the role of modern day CFO, right, undergoes a significant transformation. So it's not about a mere financial duties so far. A lot of complex responsibilities has come into the CFO's table today, like value creation, multi-capital, even digital transformation to that matter in terms of how to bring about digital change inside the finance system of the community. And this entails today in terms of measuring a diverse array of assets, including human capital, importance of key relationships, right? Today, CFOs are known for looking into P&Ls, top line, bottom lines. No, it's more to do with maintaining relationships with the investors and a lot more innovation, right? So I always see CFOs as the most intellectual people because I've been scarred of my accounting papers in the past during my MBA days. So CFOs are always 1 or 2 levels above whatever I saw. So as a result of combined efforts of whatever we mentioned today, we see that the CFO has evolved into a term called as CVO, Chief Value Officer. And in today's webinar, I am super honored to have Mr. Rajan Bala Venkatesan, CFO, Latentview Analytics, one of the growing companies, one of super growing companies in today's era, have revolutionized the world of analytics as well. Thank you so much for joining us today, Rajan. Warm welcome.
Thanks, Kirubhahar, for that really nice, I would say, introduction, and really happy and excited to be here talking to you. You know, I think one of the things that you did mention was, yes, the other sort of C-suite people, I would say, have always had this, I would say, ecosystem of catching up or being, I would say, in some sense, they're the more social animals when it comes to an organization. The CFO or the finance team in particular are seen as a bunch of people who sit in one corner and keep working away, right? And traditionally, they've not been, I would say traditionally, when I say traditionally, probably 20, 30 years back, the view about a finance team was very different from what it is today. And so really excited today to come and share my perspectives on how the role of a CFO and the finance function in general has evolved over time. So thank you for having me over.
We are very glad. A quick introduction about Rajan today is he is a leading CFO from a pure play data analytics company. He is a very, very seasoned professional with over 1.5 decades of experience in mergers and acquisitions, fundraising, due diligence, FP&A, valuation, financial modeling. Of course, he has taken a company to IPO. I guess those are the finance terms that are there. I don't think there are any more finance terms outside it. And he has worked in big companies like the Deloitte, FSS, and Ashok Leyland prior to joining Latentview. And yeah, like you mentioned, CFOs are usually seen as people sitting in one corner doing that stuff. But a lot of CFOs have proved it wrong. And today, I guess you are one. I'm sure you are one of the avid runners in the Chennai circle where I see you running in the morning, very, very fitness enthusiast as well, Rajan.
That is actually true. So in some sense, I mean, if I have to identify myself, running is a very strong part of my overall identity. I mean, so if you ask me what are you, right, what defines you, I think running would be one of the key things that does define me. I would say it's a sport or an activity that I picked up close to about, I would say, 9 or 10 years back. Right, I've always, I would say, right from my school days, I'm someone who's always been very interested in sports. I used to play football for my school team, but then, as would happen with most kids who grew up in the 80s and 90s, I think academics was obviously the number one priority for parents, right? And beyond a point, I think parents would just tell you to just shut up and study, right, and get good grades. Which is the normal route that I also took. I think somewhere around 10th standard, I gave up a lot of my the passion for football, and 11th and 12th was just all about academics and getting good grades and getting to a good college. And once college happened, went to a good college, passed out. Of course, I went to a college where most of my classmates were, at that point in time, there was this huge, I would say, mad rush, MBA rush to get into the IIMs. In fact, quite a few of my classmates that I studied with went to the different IIMs in India. For me personally, I mean, I took a decision to pursue chartered accountancy, also because I'd grown up seeing an uncle of mine who was a chartered accountant in the 80s, and he was someone who was always very well respected within the fraternity and also within the family for whatever he had achieved, right? And he used to work for fairly large, well-known names. So for me, CA was I would say a natural sort of progression, and then I took up CA. Well, of course, after that, the first 10 years after qualifying, I was also a part of the rat race, right? As everyone else is, and where climbing the corporate ladder was obviously number one priority. But somewhere down the line, I did realize that it's important as you spend days and years and months at office. It's also important that you take some time out, right, to be physically active, and that led me to running, because I did realize that I have a very small window of time before my daughter. We had a baby daughter called Maya. She's 12 years now, no longer a baby, but she was born in the year 2011. So somewhere in 2014, once she was a little older, where I didn't have to spend long nights, I did realize that I had a small window in the morning, which I can probably dedicate to doing something productive, right? So, and running was something that didn't necessarily always, you didn't need a partner or someone else to sort of turn up for you. But I did find a group of like-minded people. I joined the Chennai Runners group, and I've been running with them for close to about 9+ years. In fact, they're almost like second family to me. And it's an activity that I love. I mean, and it's that, but that's a way, we can keep that discussion for a separate day, because I can keep talking about running. But it's something that keeps me sane, and it also keeps me going. So it's a very
nice.
important part of my identity.
I believe from the passion you have towards for sports, I guess I could do a webinar only at that side of Rajan per se. Yeah. In fact, your name itself is very unique, Rajan, Bala, Venkatesan. For those who know the likes of Gautam Vasudev Menon, usually the heroes of Gautam Vasudev in movies have names like the Rajan, Bala, Venkatesan. The first time I saw the name, it was like that. Yeah. Very nice. So I do have a separate respect for people who have done CA, because one, it's for a very long period. Two, how do you guys understand that, right? So that itself that's super exciting for me. So you've been successful as a CFO. You've taken a company to IPO. So little diving into the chief value officer part. Also, before asking a question to the audience as well, you guys can post questions on the Q&A section, and we'll be picking it up wherever, whenever in between the conversation as well. We are not going to keep the question and answers only to the last. We'll pick up here and there as well, right? So is the chief value officer role, is it an evolution of the CFO role, or is it fundamentally distinct and unique, you would say, Rajan? Your thoughts on it?
So I would say the reason why I say value, right? I mean, of course, value goes much beyond I would say the valuation game that you did speak about, which I would say the sort of explosion that we had in the whole startup ecosystem, right? Be it the e-commerce side, be it SaaS companies, the whole explosion that happened also led to, I would say, in some sense, companies trying to focus on building valuation as opposed to creating value for shareholders. The point that I'm talking about is, when you talk about a chief value officer, it's essentially about creating value for all your stakeholders, right? It's not just your investors, it's also your clients, your employees, the entire ecosystem that you work with, right? How do you create value for everyone, and how do you ensure that value is preserved and grown over time, right? So it is definitely an evolution, I would say, compared to the traditional role of a CFO. Historically, the CFOs were looked upon to one, ensure that the books of accounts, right, or the records that the company is supposed to maintain are all in order. You produce a good quality set of financial statements that is free from any material errors or have factual inaccuracies. It complies with the relevant accounting standards. You're also compliant with regards to all the applicable laws and taxes are paid on time, right? So that was the principal role of a financial officer to ensure that these traditional areas that someone a CFO was tasked with were dealt with accurately. And of course, the board and the audit committee would always look upon the CFO to ensure that the books of accounts reflect the actual state of affairs in the company, right? So that was the traditional role of a CFO. But increasingly, like you mentioned, right, the role of a CFO has dramatically expanded, right? If I were to just take my case, you did mention that I have a fair amount of experience on the M&A and the fundraising side. That is one area where CFOs are increasingly playing a very, I would say, important and a strategic role, right? I mean, as CFOs, you obviously cannot grow the company in terms of organically. You can't drive sales, right? Because that's not your function. But inorganic is one way in which you can really add to the growth of the overall company, right? And the right M&A done, classic case that I keep talking about is, for instance, Facebook buying Instagram, right? I mean, you look at what Instagram has done to Facebook. I mean, they've done really good acquisitions, and also if you look at companies like a Microsoft, there was a Steve Ballmer era where they bought companies like Nokia, for instance, which they had to entirely write off a year after the company was bought out. And then you look at the Satya Nadella era where they've done acquisitions like LinkedIn. They've invested in ChatGPT, of course, which is the talk of the town now, right? So you look at how M&A has evolved even within companies like Microsoft. And in the Indian context, you look at a company like, say, Tech Mahindra, for instance, and they went and bought Satyam at a point where no one would touch Satyam with a barge pole, right? But it really catapulted Tech Mahindra into a different league, and now they are in the top 5 technology service providers from India, right? So the right M&A done can really transform and be an orbit shift for the company. And CFOs are playing a significant role in a lot of organizations. Strategy, again, the CFO's role is now increasingly the CFOs are being called upon to be a strategic partner to the CEO, right? And I can talk about Latentview's instance where I regularly partner with the business heads as well as the CEOs on a frequent basis, and we exchange a lot of ideas. And I would say it's both ways, right? It's not the communication happen both ways. I go to them for ideas, and they come to me for ideas, right? So it's I would say rather than operating in silos, there is a lot of collaboration that a CFO has to do today, right? And that is how the role has evolved. So these are just two things. You can talk about investor relations, for instance, because as companies raise capital, could be from private equity, could be from venture capitalists, could be from the capital markets, for instance, like us, where we are publicly listed companies. You have to play an active role in managing investor questions and queries and handling that entire investor relations part. So several, I would say, critical roles that the CFO is now being asked to perform. And that's why, the CFO today, like I said, right, that role has evolved from a traditional role to that of a chief value officer.
Wow, very extensively put and very comprehensively put, right? So from if I have to probably compare the role of CFO to a game of chess, I believe CFOs have become the queens, wherein you guys have to move across all the direction, not just protect the board, protect the king, but then protect everybody, and then play aggressively on the front foot as well. So very glad to know. So in that case, when you talk about mergers and acquisitions, I remember recollecting one name. When you are a legendary company and you have someone who is really doing well in your space as the competitor, you don't have to kill the competitor, you just buy out them. A classic case of where Facebook had bought out Instagram, right? So in this space, if I specifically have to ask about M&A, not just looking at the financials, not just looking at how good the company is and all that, what kind of strategies as a finance person do you see when you are talking or thinking about M&A? Can you throw some light on that?
Yeah, that's a very important question, and I think again, a lot of companies are I would say in some sense redefining the way they acquire companies or even look at companies, right, as opportunities. So I think the start point for why you want to acquire, right? I mean, you look at companies like an Infosys, for instance. They've done very few, even though they have almost like a 25-30-year-old corporate history. They've done very few acquisitions. They've grown to a very large scale, right? And that's their strategy. So they will acquire very small companies for capabilities. As opposed to that, you look at a company like Accenture. In a year, Accenture does anywhere between 25 to 30 acquisitions, right? So that's the level of the M&A team is as active as the sales or the business development team in Accenture. They just keep buying companies. So you'd have to understand, if they end up buying 25 companies, they probably evaluate 500 companies to acquire, right? Because typically the funnel, just like a sales funnel, right? Your top funnel will probably have 10 opportunities, your middle funnel will have maybe 5 or 4 opportunities, and the bottom funnel will have 2 opportunities, and then you finally convert one of those opportunities. So it's very true for an M&A opportunity as well. So just imagine, for you to analyze and look at maybe 500 companies, right? What sort of an engine do you need to run with, right? So these are just two different examples that I'm talking about. But the start point for any M&A, I think is has to be, I would say, you have to really define what is your criteria, right? As to why are you acquiring? Are you acquiring to scale your business, right? Are you acquiring to, one, eliminate competition like you just mentioned, right? Or are you acquiring to, one, either enter a new market where you believe if you were to organically try and grow in that market, it will take you substantial amount of time, right? And you will lose critical, I would say, period before which you'll be able to establish yourself over there. Or are you acquiring for people, for instance, right? The company has really high quality people, right? And therefore, acqui-hire, for instance, is a very commonly used way of acquiring companies, where you just acquire. I mean, there's a company which is probably building out a product or a solution, for instance, right? Very smart bunch of people, but then the company is not yet commercially proven, right? So you just hire all of them, but then you pay them a certain value, which is based off, companies pay 5 times the cost to the company, right? So they have 10 people, each of whom whose market compensation is, say, whatever, say a 500K, right? So you have 10 of those people. So you pay a certain multiple of their annual compensation and just bring all of them on board, because this is a great set of people, right? Or you can acquire for instance, capabilities that you don't have today, which is a white space in your overall bouquet of offerings, which your clients demand, for instance, right? But you don't have today. And for you to build those capabilities will take a lot of time. So you have to get your priorities right. You have to go to the drawing board and clearly say what is the reason why you want to acquire, right? And then you, based on that criteria, you go out and you scan the market, right? In terms of which are the opportunities that will actually fit, right? So that should be the starting point. Of course, as we go along, culture is again a very important aspect that I think you cannot. I mean, people acquire for valuation, people acquire for scale, right? But the acquisition is only, I would say, 25% of the work done, right? I mean, the proof of the pudding is in the eating, and when you acquire a company is when you will actually realize there are so many things that you will discover once you acquire a company, right? About their culture, their way of working. I mean, of course, when someone wants to sell, for instance, they will sing a very different tune. But once they post acquisition, right? Once they see money in their bank accounts, it can be a very different sort of a story, right? And at that point in time, especially being a listed company, for instance, you can't, the risk of having a failed acquisition and you having to sit in front of analysts and answering them if an acquisition goes bad, for instance, right? And you have to take a large write-off, for instance, on your balance sheet, that is going to be really hard. So you have to, the post-merger integration is the one, I would say, one of the most critical aspects that you need to look at. And in all of these areas, right? Today, for instance, in my company, I'm playing a very active role in one, defining the criteria for what sort of targets do we go after. Of course, this is in mutual consultation with the business teams. There's a very active dialogue that keeps happening. But beyond that, we are very cognizant of the cultural aspect of which cannot be defined in a financial metric. If the company is very culturally different, no matter how great the company is, the M&A will be unsuccessful.
Wow, lovely. So in terms of post-merger integration is very super important, because I personally read a lot of places where it's because of the culture per se, the mergers where mergers are the acquisitions were not successful enough. And just going a little deep into your answer, I just realized that you spoke about sales, top of the funnel to the bottom of the funnel. The other side, you spoke about strategy as to why you go about that. That defines that why a CFO needs to be in different places. And very well put, very thorough answer. Thank you so much for that, Rajan. And we also have a very interesting question. Since we mentioned about talking to different departments inside, what are the kind of topics? Thank you, Bharat Jashwani, for that question. So what are the top kinds of topics you discuss with VP of Sales, VP of Marketing, and CTO?
Very different topics, right? So one of the things that we've very actively done, and I can talk from personal context right over here, is obviously the IPO was done with a view to make an orbit shift in the way we were growing at a certain rate, right? We were doing things quietly under the radar, but we wanted I would say the rate of growth to be much more faster, right? And once you're a public company, it's like being on a treadmill, right? So if someone's put you on a treadmill, now you can't stop. You just have to keep going, right? So there's no off button for this treadmill, unfortunately. And therefore, you have to go and stand in front of the market every quarter and explain your performance. Therefore, when you talk to the VP of sales, right, while you make a lot of investments and you of course, when someone wants an investment and any department comes to you for an investment approval, they obviously will paint the most rosiest picture, right, in terms of what will this investment generate over time, right? You as a CFO,
ROI.
Yeah, absolutely. What is the return that this investment will generate? And if we don't do this investment, what will we actually miss, right? I think generally department heads do a good job of why they need the investment, right? So they will come to you with a very strong business case. Now, you as the CFO, who's the gatekeeper or the custodian in some sense of the financial health of the company, right? You have to take a very pragmatic approach. So the easiest thing is to be very critical of what someone is trying to present and shoot it down, citing some reason, right? Which I've seen personally. I've seen several of my seniors, for instance, in the past, where their initial response to any proposal is a no, right? Go back, do homework, and come back, right? I'll give you some 5 questions. Because it's the easiest thing to ask questions which people don't have an ready answer to, right? And make them come back to you at a later point in time. So it's one, when you talk to a VP of sales, and going back to this question, right? I think one of the things that when someone's looking for investments or to hire new people, right? And sales is is obviously the toughest job. I mean, they of course get the most amount of I would say respect, and as well as I would say attention in an organization, rightly so, because it's a thankless job. It is you have to constantly be on the run, right? But when I talk to the head of sales, one of the things that we as an institution are looking at is what happens before you actually land a sale, right? So obviously the pipeline review, all of that is something that you constantly do, but what is the activity that happens before? So what is the level of activity? What is the level of engagement, right? So when someone joins a team, for instance, right, we've come up with KPIs which define what a person should do in the first 30 days. I'm talking about a salesperson, what they should do in this first 60 days. And by the end of 90 days, right, what should be they doing? And these are, they can differ from company to company, but we've sort of laid this out to really understand if someone is coming in new, right? In the first 90 days, what do they need to do, right? Mm-hmm. And therefore, we believe that we've made the right hire, right? The other thing that you also need to sort of support the sales team with is if you take a company like Latentview, right? So there is while a lot of our sales folks are situated in the US and European markets, which are our primary markets, there is a very active support team that sits out of India, right? So there's a demand generation team that sits here. There is a pre-sales or a solutioning team that sits here. right? It works very, very closely with the sales team. So you need to set them up for success. So the easiest thing to do is to question why people need an investment. But I think once you made that investment, it's very, very important that you set people up in the right way and set them up for success. I think that is very critical, and that's where monitoring some of these KPIs, right, that I spoke about, the activity levels that they're doing, and this cadence of 30, 60, and 90, and what they're actually doing, right? Are we setting them up in the right way? I think that's very, very critical. When it comes to marketing spends, again, we as an organization, I can talk from a Latentview context, traditionally spend very little amounts of money on marketing, right? And if you compare it as a percentage of, it's a constant gripe that my marketing head would have, that we don't
I
spend
guess it's universal everywhere.
Absolutely. So it's a constant, I would say, tussle, and I think we've from where we were 2-3 years back, we've gone to respectable levels. But I know for a fact that for instance, SaaS companies, right, they spend inordinate amounts of money on marketing, because customer acquisition cost is really huge for you guys, right? So, and therefore, all of you, when you're in a growth phase, you need to continuously keep pumping in money into marketing, otherwise growth will sort of taper off, right? So for us, how do we, while measuring the ROI and all of that is important, right? We've come up with a set of metrics, for instance, that go beyond, I would say, the traditional ROI. So if you do an event, for instance, how many leads did you generate and all of that? I mean, those are traditional ways of looking at what does an event generate, for instance, right? But we now look at various other metrics which are I would say from a so marketing now is also tasked with generating pipeline. So finally, these leads have to convert into a certain pipeline, right? So they're being tasked with, they obviously cannot close a deal, but you have to ensure that this is the total value of a pipeline that's getting
generated. Yeah.
Right. So that is a very critical measure, right? So again, over here, constantly having dialogues, constantly driving reviews with the head of marketing to see how's the function performing, right? And how can we support them? Using technology again as a big lever for marketing, obviously with the whole ChatGPT and Gen AI, right? Marketing is, I would say, one of the functions that will be transformed in a significant way, right? Whether it's running campaigns, whether it's sending out emails, right? A lot of those tasks, generating content, marketing is definitely one function that would, I would say, be significantly impacted in an organization. And how are we then using effectively tools to drive efficiency in the marketing function? I think those are all very important conversations to have with when you talk to a marketing officer or a VP of sales, for instance.
Thanks, Rajan. Very well put. And of course, maybe on a lighter note, to the CTOs, I guess CFOs would tell, go find a tool, a SaaS management tool like a Spendflo, which is going to help us cut down on the costs. So maybe that's a sort of conversation that's going to be there with the CTOs as well. So since you touched upon KPIs, right? So I just wanted to ask a little different from the non-financial KPIs. From a non-financial KPI standpoint, how are CFOs today involved in setting up and measuring the non-financial KPIs, and what benefits do you think do they bring to the organization as a whole?
Oh, immensely. I mean, I think the non-financial KPIs are, I would say, very, very critical, right? I mean, when we look at even internally, for instance, this is, I would say, a change that we brought about within the company today to one, evaluate customer success, right? So one, obviously, historically, if you see goals and targets were either, I would say, would have a target would of course be monetary in value, and goals could be something more tangible. But now today, at least within the organization, the net promoter score and what our voice of customer, for instance, indicates, right, in terms of the customer satisfaction index, what are we hearing in terms of so we are a data analytics company, and I can talk with reference to some of the insights that we provide, right, to the organization. We classify the insights based on the level of impact that it has on an organization, right? And we classify them as 1, 2, and 3, with 3 being having the highest impact and a C-level person, for instance, acknowledging that particular insight, and one would be at a lower level. So these are metrics now that are actually being actively tracked, right? Which then go into, for instance, the KRA or the performance review of people across the organization, right? This is very, very important one, because very strongly we as a company, right? If you look at our revenue growth in any particular year, 85% of our revenue growth comes from existing accounts. It's only 15% that actually comes from new accounts, right? And therefore, customer satisfaction and how well are you managing that relationship is a very, very important metric for us, and which is exactly why we've chosen to embed this particular metric as a KRA for people, right? And I would say this is the first year in which we are implementing this. So now actively tracking each of these metrics, right? Because finally, we are dealing with people at the end of the day, right? And everyone's career is important. So, but when you bring a lot of objectivity in terms of how are you defining customer success and how does that translate into your performance and finally to the company's performance, right? I think very, very critical measure. The other aspect that, in terms of non-financial metrics that I can talk of as the CFO is, I look at the number of, I would say, investor engagements that I do every quarter, and how my overall engagement with investors is actually going up, for instance, right? The number of people, like for instance, you mentioned you had a fairly healthy participation today ahead of this call, and some well-known names, right? For us, the number of people, for instance, who attend our investor call every quarter, right, and who tune in to listen to how we performed, that plus the quality of the people, right? We grade them by A, B, C, right? I mean, A being, funds or investors who of the highest pedigree, and C probably are smaller funds, right? So the pedigree of the funds who actually attend our calls, right, and who ask for meetings, for instance. These are all metrics that we track, right? Because this then automatically tells you that people are interested in you as a company, right? And there is a lot of and these are intangible things. I mean, of course, doesn't mean that just because someone's done a meeting with you, they're going to invest in your company in the next quarter. A lot of times you have to nurture these relationships over a period of time. And then eventually people also look at credibility, right? I mean, what you say versus what you actually deliver, right? It's a very, very important thing. I mean, you can say the financials, yes, of course, is the end product, right? But if I go to the street and tell that this will be my performance, for instance, right? How are you tracking against it? What is the margin variance, right, on a quarter on, and that basically adds up to the credibility that you have, right? And those are things that you build on over a period of time. These are all intangible things, but very, very important. And finally, they add to the value of the company. So there's a very commonly quoted saying on the street that Infosys, for instance, if they say they will grow at 2%, they will actually grow at 4 or 5%, but always under promise and over deliver, right? So that's the commonly quoted thing but that's a credibility that they built over a period of time, right? So these are, I would say, intangibles or matrices that you have to constantly measure. Several other I would say matrices that we as a company track. The pipeline itself, right? How do we, for instance, look at the velocity of, for instance, how long does it take for us to close deals from the time a deal comes in to the time we actually close a deal, for instance, right? What can we do to improve the velocity of deal closure, for instance? How do we go after larger ticket size deals? How do we do longer duration deals? And what are the matrices that we need to track to ensure that we are supporting the sales team in achieving these? So several of these, I would say, Kirubhahar.
That's a lovely answer, Rajan. So I believe you're not just a finance leader or just a chief value officer. I guess there is a CRO in you. There is a customer support officer in you. I guess you wear a bunch of hats as a CFO. There's a very interesting question pointing towards the sales front. What is your expectations over the linearity of sales deals signed? Usually sales pushes most of the deals during the last few days of quarter to escape the due diligence and strict approvals route. How can a finance dealer influence the sales behavior? This feels like more pointing it towards my team personally as a head of business. But generally, Parag, it's because of the targets the sales team pushes towards the quarter. We are not people who would like to escape the due diligence. But yeah, I'll let Rajan answer that question.
Oh, this is a bane of all the finance folks. I mean, in fact, whenever there's a budget that's put out, right? I mean, at the beginning of the year, you would always know that most of the targets are also back-ended towards the last quarter, right? And as easy as it is to sort of blame the sales folks to back-end everything or backload everything, I think this is one big change that going from a privately held company to a listed company has. I don't think we fully still made that transition, right? But I think it is helping us make the transition, the sort of cadence and the discipline to close deals on a quarterly basis, right? I think that is something that has definitely improved. I wouldn't say it's industry leading, right? But we are making that transition slowly, right? So where we are assured of sequential growth every quarter, right? Of course, there will be some level of seasonality in every business, where it could be one quarter which is traditionally seasonal, and for instance, where clients have either budgets to spend and therefore there's a budget flush effect that happens, and then there's like a big uptick that happens. But as a finance leader, how do you influence, right? I mean, I think one of the things that you can also I've seen work well is tie incentives to quarterly performance, right? And that could be one. At the end of the day, incentives are the biggest motivator for anyone, right? And therefore, you need to, if incentives are tied to quarterly closures, for instance, that may drive that more, I would say, disciplined behavior of closing deals. That could be one big lever. The second one I would say is to also, like I said, right, there are businesses which are, of course, always seasonal in nature, right? In our business specifically, we always see that Q3, because we are an Indian company, Q3 is effectively October, November, December, right? That's seasonally our best quarter always, right? So, and therefore, we will always have a very strong second half compared to a first half, right? So some of these things you cannot avoid or you cannot completely change, right? But what would be very important is, even if, for instance, people are not able to close or book revenue in this particular period, I think for you, I think people should be given a big pat on the back as long as they're able to add to the order book, for instance, right? Because a healthy order book at the end of the year will add to the next year's revenue, right? So even if, for instance, I'm not able to book the full revenue this year because I closed a deal late into the year, the fact that I was able to close a deal adds up to my next year's book of work. And therefore, you should not look at it as, I would say, companies sometimes tend to take a very short-sighted view of some of these things, because you're not able to capture the full value of the deal in a financial year, and therefore you would have missed your targets or missed your performance that you would have committed to the investor, for instance, right? But where you need to then actively engage with the investor community and tell them is, hey, see, even though I wasn't able to, for instance, realize the full potential, I have my deal book or my order book is actually growing, right? What I'm closing on a quarterly basis is growing, and therefore, while I was not able to realize the full potential this year, this will add to my revenue next year. So I think communication is very important, and also actively talking to the sales teams, right? I think in what way can you help them close deals? A lot of times you will see the sales teams very actively coming back to you with, say, either it could be a line in the contract that needs to be changed, or some legal clause that needs to be dropped, or something that needs to be turned around really quickly, or some pricing benefit that they may look to sort of pass on to the customers, right? I mean, these are all things that where I think the finance team should, or the CFO has to work very closely with the sales team to help them close deals. Of course, you need to have I think some level of commercial discipline also to sort of not underprice or sell things at a throwaway price, which will erode margins. I think you, as a CFO, it's very important for you to have that line of sight while you want to aid or supplement growth. You are also responsible for the bottom line, and therefore pricing and the long-term impact of any short-term pricing decisions that you take, you have to be very careful, and that is your responsibility, right? You can't say that a sales guy, wanted an aggressive price and you sanctioned it. But if that's going to erode your positioning in the market, you are then responsible for that. So you have to be very careful. You have to take I would say, a very balanced view on some of these aspects.
Lovely put, Rajan. So yeah, the final part, especially where we say because of an aggressive pricing, the sometimes the positioning of the company itself altogether changes, right? So I've seen that happening, and yeah, very well put. So little towards the buzzword in the market where we are talking about the digital transformation majorly, right? I've been hearing it across different functions inside the org, across different organizations. So Parag has said thanks for the wonderful explanation. Thank you, Parag, for that. And how do you see CFOs play a pivotal role in overseeing and driving digital transformation initiatives within the finance department? Because outside, there's a lot of bunch of tools that have come in, a lot of ways. How do you see digital transformation evolving within the finance department per se?
Oh, it's a big game changer, I would say, Krabakar. I think any CFO who's not using technology to the fullest, right, and still is using Excel spreadsheets and I don't want to name my company, this company, but this is the company that I work for, where the VP of finance that I was reporting into would still take printouts and like tick off, right? I mean, use a calculator to sort of verify or vet every number. I mean, there are some people who still work in that way, but as a CFO of a company that's helping companies digitally transform themselves, I think you have to practice, right, what you preach to the market. So therefore, you cannot be using traditional methods anymore. So an ERP, if you've not already invested in, is an absolute sort of, I would say, a must if you're a company that is growing at a very sort of healthy pace. Even if you don't believe you at this point in time you need an ERP, I think it's something that you should actively consider, right, at a minimum. Because one, it also drives, I would say, some level of discipline in the way you report and close books of accounts, right? And because ERP will force you to adopt best practices, right, in the market. So there is a reason why there's a product out there. So they will bring in best practices from various companies in. So that's a given, right? But I would say more importantly, early reporting, right? I mean, while the frequency of reporting today, I mean, people are used to seeing a monthly financials, right? Of course, you see daily dashboards that I mean, we live in an era of dashboards and business intelligence, and everyone has some form of a report that they actively monitor, or KPIs that they monitor on a daily basis, right? But what does that translate into numbers and performance? Still, companies more often than not look at monthly sort of financials, right? And you'll have a monthly business review that you will do with the business head, right? But a lot of times, what ends up happening is it's by the time you actually finish the month. So, for instance, if a company like ours, we operate on a quarter to quarter, right? So, for instance, if I wait till end of month and then a week after that I report numbers to management, right? You've already almost like in the middle of the quarter, for instance, right? And for you to then take any corrective action if there is something adversely going wrong will be quite difficult. And therefore, it's impossible for you if you don't adopt a lot of technology to drive early warnings, right? Or early, I would say, reporting of things that need management attention, right? Could be things around how your order book is looking, right? For instance, what is the visibility that you have for where you will land in this quarter, right? And a lot of that will only happen if you use technology very extensively. Keep a so, for instance, I as a CFO very actively look at the CRM or Salesforce, which is what we use. But I'm more often than not, at least I have a good sense of where each of the large pursuits or deals that we are looking at, where are they headed, when are they likely to close, right? And these are very important things, because when you sit in a management review or a meeting, you're then just not relying on a sales head to give an update on the deals, right? I mean, you also have a view on how things are, right? And it is very important for as a CFO to have that view, because that's the only way you can forewarn people, right? Are we going to hit numbers this quarter, or are we going to miss numbers, right? And so you have to be very closely working with the business teams and use technology to the maximum possible extent.
Very neatly put. A CFO looking into CRMs and talking about deals. Yeah, wow. There's definitely something. So along with it, a little more to add what Rajan said. It's a lot to do with the kind of tools, but it's also more to do with how the CFOs also define the process of digital transformation, because it's not just about the use of tools. And I'm sure Rajan has done wonderfully in terms of implementing different tools and the seamless process that flows through it. Which ultimately drives the digital transformation. And that is a very interesting question. As companies grow, inefficiencies tend to grow in tandem. This is where CFO and the finance team can play a critical role in moving from the perception of a cost center for the org to being a savings or a profit center. For example, generating ROI in terms of savings, which adds to the bottom line, generating additional income sources, which adds to the top line through various actions. On this front, could you share some of your experiences during your journey thus far?
Absolutely. I mean, I think you can't the role of a finance team being a cost center or just I would say, you know, a sort of sunk cost that everyone just needs to commit to, right? I think those days are gone. I mean, you have to constantly drive efficiencies across the organization. And here I would say a CFO again and a finance team also has to move away from the traditional methods of, like I said, right? I mean, the easiest thing for you to say is no to any new funding request that comes in, or when you have to drive, I would say, cost optimization across the organization, is to just go and randomly cut budgets, right, for people, and say that you just have to know your budgets are slashed by 50%. You just have to work with this, right? I think that's the easiest way for you to cut costs or drive in efficiencies. But what are the long-term implications of some of those budget cuts, right? I mean, if you are very short-sighted and cut marketing spends, for instance, dramatically, right? What does it lead to in terms of your growth potential, right? I mean, you have to have a very pragmatic view of driving optimization or inefficiencies across organizations. But a few of the ways that you can definitely, I mean, M&A was one that I spoke about. How can you actually improve the overall top line of the company itself, right? So that's a clear-cut case. Treasury is again a big area where you can, you know, if you through an active role that you play on the treasury side, you can drive income for the company, right? The other ways would be to look at, I would say, constantly look at I mean, the sort of markets that you play in, where, for instance, I mean, there could be different talent markets, right? There could be states in India, for instance, where they're giving you a lot of incentives. I'm just giving you examples where they give you incentives, for instance, to set up a shop over there, right? Because they want to drive employment over there. But that could lead to a lot of tax benefits for the organization and drive down costs, right? Very recently, we did within the organization, we did and this I can talk from, you know, because it's a very recent occurrence. We drove a consolidation of our, so we're today spread across 5 different geographies. We're in the US, Europe, we are in 3 countries, we're in Singapore, right? We had different insurance policies across all these different countries, right? And we had different service providers. Every country will, for instance, have their own set of laws and regulations, and it's very difficult in today's environment. I mean, you know, we're not an insurance specialist. There are a lot of exclusions. There are things that are capped at a certain number, right? And these terms were varying across different geographies, and you had different sort of premium rates. I mean, and there was no control that we had as an organization over the amount of premiums that we were paying. We decided to work with I would say, a consultant. So there are some things. That's the other thing that you should also, as a CFO, there are some things that you can drive, right? But there are some things that are outside your areas of specialization. In this case, we work with a consultant. I mean, much like you spoke about Spendflo, how do you optimize spends? We work with a consultant who is a specialist in the insurance side, right? And we said, look at our book of insurance that is spread across, right? How do we, one, the cost optimization is one. More importantly, standardization of insurance across different geographies, having, I would say, the best coverage or premium, best coverage in terms of the overall claim limits that we have, And then, of course, the premium, right? How do we optimize all of this? So simple case, I mean, we were, we very actively, I mean, of course, it was it was an engagement that we had to drive over a couple of months. There was a lot of time spent by the finance team as well. But eventually we were able to generate a savings of about $75,000. I mean, this is just a very simple example that I'm talking of, right? Which on an annual basis that we were able to generate. But more importantly, we were able to get an additional 2.5 million coverage just by consolidating all of the insurance that we have across. I mean, these are just simple things that as a you can pick up a few of these things, right, across the organization and see how can you actually contribute, as opposed to just in a random or an ad hoc way slashing budgets and saying this is all you have to spend.
That's a very nicely put point. Thanks to somebody who asked that question, because you touched upon a word called as cost optimization, which is also currently the buzzword given the current macroeconomic conditions, right? And it's a lovely wonder to hear that how just from an insurance for the company, how can it go around a lot of consolidation and optimization, how that much of savings can be created. That's a very great insight. On that front, right, talking about cost optimization, I'm sure today in companies' world, SaaS costs are also increasing a lot. Tech and SaaS costs are increasing a lot. And that's where Spendflo as a company also comes into in terms of optimizing the costs for tech spends and reducing the costs of the company. So that's another way where CFOs can also look into. And I'll also have, for the attendees, I have launched a poll wherein you guys can just, if you'd like to know more about the Spendflo, you can just click a simple S, and I'll ask one of the people to talk to you from post the call. And in terms of, in the interest of time, I'll probably wind the conversation with one last question, right? So how do you see the role of a chief value officer or a CFO evolving in the coming years? What challenges, what opportunities, introduction of AI, introduction of generative AI, artificial intelligence, the world is moving towards a lot of unprecedented challenges are also ahead, be it the COVID is an example again, time and again we keep quoting, right? What are the challenges as well as the opportunities that lies ahead for the finance leaders in this capacity in the evolving and coming years, Rajan, according to you?
Immense. I think the opportunities are I would say immense. As technology evolves, as you have greater automation, I think the focus will shift from the traditional roles of transaction processing and reporting to more strategic thinking and adding value, right? I think that will be a significant shift that all finance functions will have to move towards. More importantly, the being in the finance function, I think it's also a matter of great privilege, I would say, in some sense, because you're almost at the epicenter of all the information, right? At all, finally, every metric, right, at the end of the day, or every department finally will culminate into something that will be financial in the nature, right? So finally, how good your strategy is and how good your execution is will translate into financial performance. And therefore, in some sense, you're at the epicenter of when you look at numbers. If you're smart enough, you can actually see whether the strategy that you have, right, is actually playing out, and finally it is converting into numbers, right? And therefore you have to then I would say take a step back, look at the larger picture, see what you as a leader, right, can do to one, drive growth within the organization, to create value for investors, create value for employees, create value for your entire ecosystem, be it your vendors, be it your customers, right? How are you driving value across the entire ecosystem of people? And ESG is, of course, the big buzzword, right? I mean, much like Gen AI and data and ChatGPT, ESG is again, in some sense, a big boardroom topic across companies, and again, the CFO office will increasingly play a big role in how a company reports under ESG frameworks, and how do you improve your ESG rating and score over time, right? And based on your ESG score or rating, investors will actually, over time start putting money into companies which have a higher ESG rating, right? So you are again at the epicenter of driving some of that change. So I would say the opportunities are immense. If you're a smart and dynamic leader, you will use technology to your advantage to then free up some of your bandwidth and focus more on the strategic aspects as opposed to looking at the more transaction side of things.
Great, lovely summing up, Rajan. So honestly, talking to multiple finance leaders, this is probably the first time I didn't feel like just talking to a CFO, right? Maybe that's why the topic was more tailor-made to you, from being a CFO to a chief value officer. We spoke about finance, we spoke about strategy, we spoke about sales, we spoke about tools, digital transformation, much like not a lot of finance leaders talk about the Gen AI and ChatGPT, how it can be implemented. So that's where somewhere I feel CFOs today not just wear the hat of a finance leader, they do wear hat of every single leader in the company, and not just gatekeepers of the finance, and they're just a queen of the game. Right. Thank you so much, Rajan. It was a very pleasure having you. I had a really great time, and hope the audience also had a great time listening to you. There were some wonderful questions as well. Anything more, feel free to reach us on over the emails. This is Kirubhahar. Thank you so much. Thanks, Rajan. Any final thoughts?
No, just thanks for having me over. It was a pleasure, having this conversation and answering some of the questions that the participants had, and look forward to engaging with you in the future as well.